The fundamental macroeconomic backdrop for Bitcoin has never been more bullish. With a pro-Bitcoin administration about to take office on January the 20th with the intention to start a Bitcoin strategic reserve, this could lead to volatility to the upside. You've got the fundamental adoption, especially when asset managers like BlackRock suggest an allocation of 2% to this asset class. Sovereign wealth funds talking to these same asset managers about whether they should add this to their treasury. You've got treasuries, you've got corporate treasuries adding this to their balance sheets. You've got massive companies like Meta suggesting voting on whether they should use their $72 billion of cash to buy Bitcoin and add this to their balance sheets. Again, something that they will hold onto. You've got the increasing adoption of large wallets that are stacking in the 100 to 1,000 amounts of Bitcoin. You've got the hash rate growing as the infrastructure being built around this asset class and around this network starts to grow. And as you can see here, you've got Bitcoin being measured against other asset classes, bonds, treasuries, stocks, real estate. All of those assets are trending to zero against Bitcoin. And then you can see in 2024, Bitcoin was one of the best performing asset classes on the planet. So with this, it just sets the tone for the more fundamental reason I make these videos. I want this video to be about the indicators that can show that we're nearing a top in the cycle, but at the same time, this is an asset that you should want to hold. This is an asset that you should definitely not sell completely. And it's something that you should position yourself in as a future insurance against inflation, against the increase in M2 money suppliers. The money fiat that we use increases. There is going to be less purchasing power in the future. So let's look at these indicators, the Mayer multiple, the MVRV score, the golden ratio, the pi cycle top, and then look at the more fundamental macro drivers that will lead to an increase further in this asset class as we start to move into Q1 and Q2, and then even into Q3 and Q4. So let's get started. If you're excited and bullish about the future and the next 5 years and the innovation renaissance that we're about to go into, please like, subscribe, drop a comment down below, and let's get started. Number one, the MVRV score, which is the market value over the realized value. This is, for example, currently Bitcoin's at 99, 100,000. If the aggregate of the coins that have been bought are around 40,000, the MVRV score is going to be high because there's the aggregate average profit is about 60,000, which means that people are going to be very tempted to take profit. If you look at the current score at this time of recording this video, we're at 2.7. And usually it's not until it gets to around 5 or starts to approach 5 that you have a market top. So I would say that at this current point in the cycle, we're definitely still early and there's definitely still room for this to grow. And it would make sense as we grow into this pro-Bitcoin administration and the fundamental macroeconomics starting to become even more positive, it's going to lead to an increase in this asset anyway. So it makes sense that this MVRV score is still quite low. So I wouldn't worry until it gets near 5 or even after 4. But you can see right now you can start to measure we're still quite far away from it. Number 2, the Mayer multiple. This is the current price of Bitcoin divided by the 200-day moving average. It gives you these step levels. And what has been quite noticeable is you can see that when it crosses the 2.4, the green line, that's usually when it signals a market top. For every cycle in the past, you've got these extreme spikes across that line. And usually that means that if it goes across that line, you've got time to start to consider, do I take some profit? Do I start to reduce my position? And at the moment, we're only at 1.35. So there's still room for this to grow higher. Maybe it doesn't get to 2.4, but you can see that it could at least get just under 2, and we're not close to that yet. So again, that's an indicator that shows me that there still could be room for this asset to grow. Number 3 is the pi cycle top, which is a really important indicator that a lot of traders use to just see how close are we to the top. You can see the blue line, which is the 111-day moving average, and the pink line, which is the 350-day moving average. And when these two lines get close and the blue line crosses the pink line, This has always historically signaled the top, and it's been quite accurate in the past. It is a lagging indicator, but an indicator that can be very useful to just signal where we're getting close to being overheated, as these averages really do show short and long-term trends, which can be very useful patterns. Okay, number 4 is the golden ratio multiplier, which is where you take Bitcoin's 350-day moving average price and you multiply it by significant Fibonacci numbers, such as the 1.618. Now, it gives you all of these different trend lines. You can see the colors. And as I start to remove some of these lines, some of these higher lines that Bitcoin has reached in the past when it hits the top, it still gives you so many more levels for it to reach. Now, if we go to the two above, the teal and the golden color, you still can see that Bitcoin, even at 100,000, is still quite far away from those lines. And this market looks like if it plays out to the end of the year in 2025, November, it could reach just under 200,000 or close to 200,000 or even above 200,000. But you can see that the general direction and the general trend of this indicator is up and to the right. And so again, it's another one that you can combine with the other three to show that we're not quite near the end of this cycle. There's still room for it to grow. And it is a good North Star again that can be useful. Now, I want to finish off with, could it be relevant? And it's all about the macro. So again, if you get value from this video, please like, subscribe, hit the notification bell. The ISM is a really important indicator, and it's the Institute for Supply Management. And it just shows that basically there's more money, there's more growth in the economy. And at the moment, we're still under 50 for this particular indicator. Now, there's also a services version of this as well, and there's also the hospital version of this as well. And it just shows across the economy what is happening. How much money do people have? How much growth is there? Are companies in a position where they can start to buy more products so that they can sell more products? And usually this indicator, the ISM, has shown the business cycle is peaking up, there's expansion in the economy, and it has always led to risk assets and private equities in, for example, tech companies, always outperform and follow this growth very, 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 very closely. And you can see in the past, it's reached over 60, and at the moment, if it gets close to 55, that could still indicate a massive move for Bitcoin, close to 200,000. If this ISM peaks up to 55, that could indicate a potential price of close to 200,000 for Bitcoin. So you can see there's still room for this indicator to grow, and it is starting to turn up, but it's not anywhere near the top yet. And I wanted to finish off with this, the 10-year yield, which is where basically in 10 years from now, if you were to hold treasury bonds, you would demand a higher interest rate on that treasury bond because you believe that inflation is going to be higher in the future. You believe that your purchasing power is going to be eroded over time. And so if this is going up, if this is positive, if this stock TNX is in the green, it's usually going to be bad for private equities because it means that they're going to struggle to reduce interest rates today. And that's what's going to hammer private equities and Bitcoin, which is an interest rate stock. It basically goes up when interest rates are reduced, and it goes down when interest rates are increased. So basically, if this 10-year yield is green, usually the rest of the stock market is red. And if this 10-year yield is red, usually the rest of the stock market is green. And as you can see in this example, the 10-year yield going down by a few percent has already made such a positive, it's already had such a positive impact on stocks like Tesla, MicroStrategy, Nvidia, and all of these more speculative tech equities, and then also Bitcoin and crypto assets as well. So I hope you got some value from this. Again, I'm just going to continue to update these charts and just show my understanding of the macro and how that's playing out, understand the fundamentals and how the political landscape starting to change in a way that favors certain investments, such as tech investments and especially AI and crypto. And so I would say that Bitcoin is not yet at a top. Could be wrong. Again, I like to document this as a way of reflecting on the price and where it could go. But at the same time, the fundamentals of this asset are that it is a scarce asset with only 21 million that will be mined over the next 100 years, and just over 19.5 million are currently in circulation. The supply is getting lower and lower, and the first time we've ever, as a human race, ever been faced with scarcity where you can't inflate and add more. It's an experiment, and an experiment that I want to be on the right side of. So I encourage you all to do more work and understand it if you don't currently understand it. And read this book, Seyfried Amos, The Bitcoin Standard, summarizes just how much of an impact this scarcity element of Bitcoin could have going forward into the future. And you can just sit back, breathe, and let this asset do its work and work for you. So I hope you got some value from this video. If you did, like, subscribe, hit the notification bell, drop a comment down below, and I look forward to reading the 1, 2, potentially 3 comments that I get. But if I get any more, I will always read them, and they are incredibly valuable and helpful for me. So all the best. I'll see you in the next one. Goodbye.